All right, welcome back to this week's Breakout Watchlist from July 25th to July 29th. In this video, we'll be covering the top 8 setups going into next week. Each of these stocks have strong fundamentals, strong technicals, or strong volume patterns to lead to uptrends. This video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of the stocks. And finally, if you're coming here for a specific setup, there's going to be timestamps in the comment section below, so you can click there and get exactly what you want. Here are the 8 different setups that we're going to be covering today. Don't want to spend too much time on this slide because we got a lot of charts to cover. The first stock that we'll cover is CHNG. This is in computer software medical, 11th strongest group out of 197 in the market. It's an A+ group strength rating. It has a B- accumulation distribution rating, so a little bit on the low side there. Overall composite rating of 87, individual relative strength rating of 92. Had strong fundamentals up until this most recent quarter where we saw earnings decline by 7%, but sales were still up 8%. It does have earnings in about 10 days, so if you're going to play this, we don't want to be buying stocks right before earnings, but if we buy and it extends 5%, 10%, we can at least take some profit and then hold into earnings. Within the group, again, very strong group, 11th out of 197. This is 5th on relative strength out of 35 stocks that make up the group, and 10th on overall composite basis. Taking a look at fund ownership, we've seen this increase from December 2021, 380 to 407 to 415 in June. Looking at the chart, I do want to go to a weekly chart really quickly on this so you can see a nice ascent from like $8 up to 23. And from this point in January of 2021, like many growth stocks, continued to kind of pull back, base out, and now we're right near the top of this pivot going into earnings in 10 days. So this might be one where it just continues to chop sideways for the next week, and then that earnings catalyst is what breaks it out of this pivot. But what I want to be watching for is if we pull back into this 8-day EMA around 23.50, that's an area to watch as well. Otherwise, if we take out the top end at $24, enter with strength at $24. Next, we go to a biotech stock, CRSP. Biotech's the 4th strongest group out of 197, so A+ group strength rating. This has a B+ accumulation distribution, 77 overall composite, 92 individual relative strength rating. This is very much a technical play. Biotechs have been a leading group in the market. This stock has shown some strength running from $43 or so up to 86, so about 100% gain in a few weeks. Going to a weekly chart, this does have some major overhead support or overhead resistance, so not a setup that I would want to be holding for a very long time, much more a swing trade. But what I like about this is as it kind of climbed higher, we eventually pull back on lighter than average volume through the 8-day EMA and to the 21 EMA. On Friday, pretty tough trading day. The NASDAQ had a distribution day. This fell 5%, down on lighter than average volume, closing near the low of the day, but right above the 21 EMA, and it held $75, a nice round number, as potential support there. So with this, I want to be getting a position as close to 75, as close to that 21 EMA as possible. Especially if the market is weak come Monday and this is showing some relative strength by holding that $75 area. That's where I would want to enter the stock to keep my stop loss as tight as possible and low risk on the trade. Next, we go back to the computer software medical group, 11th out of 197 with the stock EVH. This is a stock that I had traded before on this day as it broke out through 33. But as you can see, it broke out and then immediately kind of reversed through all the key moving averages, the 8, the 21, and the 50-day. Never closed on the 50-day moving average, which is nice. A quick shakeout, but then we reclaimed that area. Had a really nice day on Thursday on higher than average volume of 4%, closing kind of in the, what range was that? 73% of the daily range. Friday, like many things, this pulled back 2.3%, but still closed above the 8-day EMA, pulled back on lighter than average volume. And what I'm looking here for is buying around $33 so we keep our stop loss under the 8-day EMA, under Thursday's low. And keep lower risk on that trade. Buying breakouts in this market still has not been working, even though we've had a market rally the last week and a half, 2 weeks. Breakouts are still not the way to go. So for many of these setups, I'm looking for what has kind of tested pivots, pulled back, and now we can start our positions next to either the 8 or the 21 EMAs. So with EVH, we're looking at around $33 here. Next stock that we'll cover is GTLB. This stock's in computer tech services, 41st strongest stock out of 197, so an A- group strength rating. It has a B+ accumulation distribution, 57 overall composite with a 49 relative strength rating. This is a recent IPO in October of 2021. So relative strength rating kind of gets tricky with IPOs. I don't look at it as much there, but nice move from 32 up to 60 in the last couple weeks. And really what I like is this is starting to tighten up between the 21 EMA and the $60 pivot. I did try this with a break over 60 on Wednesday, but you can see that failed. It squatted, had a little shakeout under the 8-day, and then really tight action on Friday, only down 0.8% while the market was down 2%, I believe. So with this, if we could get a position starting close to $55, as you can see through this entire range, this is a stock that hasn't been a good one to buy on strength. It's much more buying against the moving averages. So if we can pull back to 55, allow that 21 EMA to catch up. The 21 EMA is at, let's see, what price is it? $54.95 right now, probably be 55 on Monday. So buying as close to 55 and that 21 EMA as possible for GTLB. Next stock that we'll cover is KDNY. This is also a biotech stock, so A+ group strength rating, B accumulation distribution, 95 overall composite with a 98 individual relative strength rating. I want to go to the weekly chart on this as well. Another one with a very long base, and we're kind of near this $20 pivot. But again, we're still in a bear market. We don't want to be buying breakouts at that $20 pivot up here. So I want to be starting a position much lower in the range to keep a tighter stop loss. That still has some room to rally before sellers step in. So we're looking at this pink line, the 21 EMA. We've pulled back into that area, closed right on it on Friday, down 2.5% on Friday on lower than average volume. All through the last week and a half or so, you've seen very light volume coming in as this just consolidates and flags out after a nice rally from 12 to 19 in a few weeks. So riding that 21 EMA up the entire way, has not closed under that area just yet. So trying to buy around 18.20, around that 21 EMA, using just below 18 as a stop loss is my plan on this. You could buy with a break over Friday's high, 18.75, and then still have a little bit of room to run, about 7% till that $20 pivot to sell into some strength for KDNY. Next we have OLLI. This is in medical diversified, 14th strongest group out of 197. So A+ group strength rating, A- accumulation distribution, 98 overall composite rating with a 97 individual relative strength. Fundamentals, very strong on this, all improving earnings, sales, after-tax profit margins. Within the group of 6 stocks, again, 14th strongest group in the market. This is number 2 on earnings per share, number 1 on relative strength, 1 on accumulation distribution, and number 1 overall composite basis. Fund ownership has been increasing on this as well from December 2021 to June of 2022. Nice increase there. And you can kind of see the fund ownership increasing with these higher lows and higher highs in this uptrend that we've seen. So we're above all the key moving averages. You have the 200-day, the 50-day, the 21, and the 8, all in the right order. Nice strong uptrend. We're not fighting against any overhead supply here because looking at a weekly chart, you can see this just continues to stair step higher. Going back to the daily chart, what we're looking for as an entry point, if the market is weak on Monday or Tuesday earlier on in the week and we pull back into this 21 EMA, building a position around 320 and that 21 is possible. Otherwise, just breaking over 330 is what I'm looking at for LLY. Next stock we have is OLLI. This is in retail discount variety, 3rd strongest group out of 197. You can start to see a theme with all the stocks that I'm watching. They're all in strong groups, and they're all strong stocks in those strong groups, improving the trade probability. So A+ group strength rating, A- accumulation distribution, 82 overall composite with a 96 individual relative strength. This stock doesn't have the fundamentals, very weak earnings per share, sales negative, but the price action has been very strong, going from $37.50 up to $71, so another 100% gain off the lows. And then now we're kind of pulling back to that 21 EMA. Looking earlier into this chart, you could see a cup and kind of handle being put in just 3 days, getting to that 8-day EMA. And now as we zoom out, you can see a bigger cup then putting in a handle, not to the 8, but to the 21. So as the duration of the cup expands, we expect the pullback in that handle to expand a little bit more as well. So instead of the 8-day that we saw in the pullback here with this mini cup and handle, we're seeing a giant cup or a larger cup and a pullback to that 21 EMA, which held the low on Thursday, nice to see, and actually put in higher highs and higher lows on Friday. Still closed negative, but some good signs of relative strength there. With this, trying to buy as close to the 21 EMA as possible, around $65, or a break over Friday's high, $67.85, a little bit extended there, but really want to look at the $65 area for OLLI. And the last stock that we'll cover today is VERV, also a biotech stock, so very strong group, has an A accumulation distribution rating. This is one that had a massive blast from $10 all the way up to $36. It did have a secondary offering on Thursday, which you saw put in a low at $30.01. So support came in right at a round number, right at $30. And that actually finished higher in the range, 64% within the daily range. So that's nice to see after an offering, especially after a stock has rallied over 200%. A secondary offering should have really brought this down. The fact that a round number was supported and we finished higher than 50% in the daily range show that buyers are supporting the stock. On Friday, we were down 6.7%, weaker market. Remember, the market was down on Friday. This came back 6.7%, but once again held $30 as the low, $30.07. So this $30 area is being supported. If the market continues to be weak, I want to try to build a position around $30. And as the market pressure lifts, this should have no excuse not to take off. Otherwise, if this does break $30 on market weakness, I'll probably give it some time. Keep it on a general watch list, but give it some time for the 8 and the 21 EMA to catch up a little bit before trying to trade it later on in a couple weeks. All right, that's gonna be the breakout watch list for the upcoming week. If you guys enjoyed the video, please do me a huge favor and leave a like and subscribe to my channel. I make this breakout watch list video every Sunday along with other trading related videos. A big thanks to MarketSmith for sponsoring the video. MarketSmith was the trading research platform that we were using to break down each of the setups. If you enjoyed the platform and want to give it a try yourself, there's a link in the description below. And finally, if you want to hear more from me, you can follow me on the other social medias. I'm at Nick Drendel on Twitter and at Nick_Drendel on StockTwits, Instagram, TikTok, and Facebook. Have a great week, and I'll see you guys in the next video.